Sandeep Sangwan, MD of Castrol India, is joining us now to talk more about the earnings and also some new initiatives which the company is taking. Mr. Sangwan, thank you so much for joining us. Let's start with the volume growth, because that is something to watch out for, both from the OEM as well as after sales. Do you see, the improved volume growth coming in from here on?
So before I get into the volume growth, what I'd like to share is, as you're aware, we announced Jan to December results. That's our financial year. And I think we were very happy with the performance that we've seen. Our revenues at 5,075 crores. This is the first time we've crossed 5,075 crores, which is 6% up. PBT is up 8% at 1181 crores. And as we celebrate 125 years of Castrol globally and 115 years in India, and also in line with the performance of the company, the board recommended a total dividend of 7 rupees 50 paisa. And I'd like to thank our shareholders who stayed invested with us. And we also launched, to drive business growth, we launched key initiatives in second half of 23. We launched Pragati Ki Pathshala, which was for truck drivers community. We also launched India's Ultimate Moto Star, which was for the bike rider enthusiast. And we've also been expanding our Castrol Auto Service network, where we have about 450 Castrol Auto Service multi-branded workshops. These are franchise kind of concept. These are not owned assets. We've also expanded into rural Bharat, where we cover about 30,000 outlets now. And the launch of Auto Care products, which we launched in May of 23, is giving us good traction, which is available now in 21,000 outlets across the country. And I think on the back of all of this, fourth quarter, our volumes were up by about low double digits. And I think you have to keep that in context, because if you remember, 22 was very inflationary. We had to take multiple price increases to manage our margins, and that had a negative impact on the volumes in second half. But as things have kind of softened in 23, we passed on some of those deflations back into customers and consumers to balance volume and margin growth. So I think that's also helped the quarter four performance.
Sure. Sandeep, also wanted to understand, while your margins have expanded on both sequential as well as annual basis, was it only because of lower raw material costs, or did higher volumes also contribute to the same?
So I think volumes have definitely played a role in driving the margin. And typically from an EBITDA margin perspective, we want to operate in a range of about 23 to 26%. Okay. And fourth quarter was specifically high because of a combination of volume growth and cost. But I think our intent is, if you look on a full year basis, our EBITDA margin is at about 24%, okay, which is 1 point improvement versus 22. And we would want to kind of keep it at those kind of levels. And what we are always focused on is making sure that we're delivering value to our consumers and customers. At the same time, from a pricing perspective, we're also conscious of that. We also have to drive volume growth. So it's always a mix between volume, price, margin that we try and balance and still continue delivering good value to our consumers and customers.
Surely it's a tightrope between growth and margins, right? But given that context, what's the expectation as to how the margins will pan out for the next 12-18 months?
So I think margin profile, as I said, would continue to be within that band of 23 to 26%, whether it is 24, 25. We'll see how the environment is. I think we're still expecting some volatility in the environment. I think while the Indian economy is doing well, and I think it will continue doing well with all the fundamentals in place, we don't know what is the impact of geopolitical events. Like, for example, we're seeing tension in the Red Sea area, which is already impacting freight rates. Okay, so I think we'll see how things progress and then continue making decisions which help us both drive top line growth and also protect margins.
Right. Mr. Sangwan, the one side of the business which is really exciting the street regarding your company is on the EV side. The parent company already has a portfolio of EV products, and now we understand that the Indian unit, which is your company, Castrol India, would also be expanding the product line on the EV related products. Talk to us more about it.
So I think as far as India is concerned, we already supply EV fluids to to two of the largest EV car manufacturers in India. We have a brand of EV fluids under the name of Castrol On, which is already available in India, both for our OEM partners, but also in the retail market. So that's on EV fluids. And globally, I think we said about 1.5 years ago, we're going to invest, BP is going to invest about 500 crores in a R&D facility in our parent company in UK, which will look at thermal management. And globally, we're seeing that there are opportunities as technologies evolve around data centers, around batteries, that there are opportunities around thermal management fluids, okay, which work with batteries and battery storage systems. And that's an opportunity area for the future, which we are actively kind of looking at.
Okay. Your dividend payout was higher this year as well, around 86%, right? So should investors expect similar levels going forward as well?
Yeah, I think our intent is to give returns back to our shareholders, okay? And typically, we've been able to kind of keep our dividend payout ratios around 80% plus. And I think we're quite confident that the business will continue doing well and will continue. It's been a very consistent dividend paying company, and we want to continue that as per our policy.
On that note, sir, we'll let you go. Time now to slip into a very short break.